Guys, this is S&P 500 weekly technical analysis for the week of June 17th. The S&P 500 broke out bullish on Wednesday after the favorable CPI data, which has indicated that the inflation is coming down. Now, this bullish movement in the market, it came even before the press conference or the Fed's decision. This means that the Wall Street knew and Wall Street was ready for the outcome of the press conference or the FOMC meeting. And as per the new SEPs, the federal fund rate is expected to remain as is and with a probability of only one rate cut. So even though the SEPs, the projections, everything was against the stock market, but still the Wall Street was bullish. This clearly indicates that the FOMC or the Feds or whatever will be the outcome from the Feds, it has nothing to do with the movement of the stock market. And this trend will continue irrespective of the decision of the FOMC. So I will discuss all of these, the conditions, bullish, bearish conditions, the technicals. Yes, one more thing, S&P 500 is now technically saturated, technically overbought, and it is not just on the daily chart but also on the weekly chart. So I will discuss everything in detail in this S&P 500 weekly technical analysis, which is for the week of June 17th, means from June 17th, which is Monday, to June 21st, that will be Friday. So guys, before I discuss the agenda of this S&P 500 weekly technical analysis, let me quickly recap what we were anticipating in the previous week and what was seen in the week. In the previous week, the picture was very much clear. As long as S&P 500 is trading below the trend line, it will remain under pressure, and then there will be a probability that it will come down to test the moving averages. Okay. However, if because of the data or the news, okay, or the FOMC, if there comes a bullish breakout, if the S&P 500 sustains above closes above the trend line, or if there comes a gap up open, in that case there will be a bullish breakout. In that case it will move towards 5,400 or so. So we have seen that the S&P 500 was trading below the trend line. Okay, there was no question of any more bullish movement. Then on Wednesday there came a bullish breakout. Now another important thing was the Dow Jones. So Dow Jones last week it sustained in the bull side. Okay, it was then around 50-50 or 60-40. However, there was a condition of this, the formation of the slip. And this is the chart of the Dow Jones, and here if you notice that there was a clearly bearish slip, and this bearish slip has forced the Dow Jones to remain in the bearish side, and we have seen red candles. And the same I mentioned here in the final update on June 13th to my Patreon community members. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Now on the weekly chart, okay, again S&P 500 is overbought and saturated. Okay, and this is happening, okay, after only after a few weeks, because there was when it was moving up, it got saturated, it came down. Okay, then there was the little fall, then now it is again moving up. Okay, and now it is saturated. Okay, so this means that whenever it comes down, it is expected to find a support somewhere around 5,300 or a little below 5,300. Okay, so I will discuss this on the weekly chart. Okay, weekly chart is the big picture. Okay, now the point number 2 of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart, you can clearly see it is again overbought and saturated. Okay, the same thing and the same condition. And secondly, okay, there was a gap up open. Okay, so there is a space, okay, in between these two levels. And the third point of the agenda is the probable movement of the S&P 500 and Dow Jones from June 17th to June 21st. Okay, so what is going to happen in the S&P 500 or what will happen in the Dow Jones, I will discuss here in this, the last point of the agenda. And guys, once again, let me remind you that all of these three sections are interrelated or are interconnected. Okay, so when I say probable movement, so I will discuss most of the probable movement here, but also I will discuss the probable movement in the first part as well as in the second part. That is why I recommend that you should watch all of these, the three sections, in order to get a clear picture or a clear idea what is going to happen exactly in the stock market, what will be the exact bullish conditions, what will be the exact bearish conditions. So guys, I'm going to begin with this, the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. So guys, this is the weekly chart, and here I will discuss the first point of the agenda. Okay, weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So before I discuss the candle, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these, the daily and the precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's first discuss the candle. This was the recent weekly candle. It's a heavy bullish candle. Okay. It's not just a good bullish candle, it's a heavy bullish candle, but this candle does not confirm any gap up open. Okay, this candle simply confirms that irrespective of any open on Monday, there will be the bullishness, and even if there comes any fall, then that fall is expected to be limited. Okay, so this is the interpretation of this, the bullish candle, right? Now let's look into the technical indicators. So in terms of the technical indicators, okay, the most important part here is the saturation. As of now, all of these are technical indicators are clearly bullish. Okay, there is a clear fan out in the moving averages. Okay, now the most important change, okay, that we have seen here is the MACD. MACD until last week it was bearish. Okay, this week the MACD has changed to bullish. There is a bullish crossover. Okay. So this means that now the S&P 500 has gained the bullish movement, or momentum I will not say, but movement definitely, okay, through the weekly chart. And remember, weekly charts, okay, they are the bigger charts, and whatever is happening in the weekly chart or whatever is happening on the weekly charts, okay, will always be felt every day in the index. Okay. Now other than this, the MACD, the stochastic RSI, okay, it was about to give a bearish crossover if this last candle would have been a red candle. Definitely a bearish crossover, remain bearish, and then more fall, okay, to these the levels. But now that there was a very heavy bullish candle, so there was no crossover, rather there was the continuation of the bullish movement. And now that the MACD is bullish, the stochastic RSI is bullish. Okay, so this clearly means that the market is bullish. Market means the S&P 500. This picture is very different in the Dow Jones. Okay, so if you have subscribed to my YouTube channel for last many months or years, then you know that this particular condition, okay, the bullish condition or the bearish condition. So now on the weekly chart, because of this heavy bullish candle, okay, the S&P 500 has entered into the saturation. There is clearly a saturation, okay, as well as overbought. S&P 500 is saturated and overbought. Yes, there is one thing, that it is as of now it is not heavily saturated and it is not heavily overbought. But whether this pressure will be felt immediately, okay, or after a week or so, then this picture will be clear through the daily chart. But as of now, we can clearly see that the S&P 500 on the weekly chart is now 100% absolute bullish. Now comes the Dow Jones. This is the chart of the Dow Jones. Okay. Now here first comes the candle. It's a bearish candle, simple. Okay, bearishness. But the most important part about this, the candle, is 1, 2, 3. These 3 candles have given back-to-back closings or consecutive closings below the moving averages. Okay, so this is very, very significant, right? Because of these, the closings, okay, there is another thing, very, very important thing in the picture, that is the crossover in the moving averages. If you notice that just in the background there is a kind of crossover in the moving averages, although this crossover is not confirmed. As of now, there is no crossover in the moving averages, but these two moving averages are very, very near, and this means that if there comes any kind of candle, but a bullish candle, because if there comes a heavy bullish candle, then this crossover will not happen. There will be another bullish slip, and because of that bullish slip it will move up, and then entire US stock market will move up. Okay, but if there comes any other candle other than this heavy bullish candle, red candle, green candle, small green candle, in that case a confirmed bearish crossover, and this will be seen after October November 2023. Okay, then it will be there, and then this will bring more bearishness in the Dow Jones. So what does this means, the bearishness in the Dow Jones? This simply means that the bullish movement in the S&P 500 and the Nasdaq will be restricted. Now in the recent times we have seen that even though Dow Jones was under pressure, but still the S&P 500 and the Nasdaq moved up. So this means that if the Dow Jones remains under pressure, S&P 500 and Nasdaq will be able to move up, but this upward movement will be limited with a possibility and a probability that it can S&P 500 and the Nasdaq, okay, they can give up anytime, okay, because of the Dow Jones, because now there is a big gap, big disconnect, okay, in the Dow Jones as well as in the S&P 500, because the Dow Jones is now trading near to the level that were seen in the mid of April, whereas S&P 500 in the mid of April it was trading below 5,000, and now it is trading above 5,400. So there is a big disconnect. But the good thing about the indices is that whether it's the Dow Jones, S&P 500, okay, whenever there comes such kind of big disconnect, then the indices, they correct themselves. So as of now, this was the candle. Now looking into the technicals, okay, clearly here the Dow Jones is neutral, okay. Now, just opposite to what we have seen in the S&P 500, MACD is bearish in the Dow Jones, stochastic RSI is bearish in the Dow Jones, and the stochastic RSI has not hit the saturation because of this bullish candle. This means that 1 week or 2 weeks, okay, if there comes more red candles or more bearish movement for next 1 to 2 weeks, then also it's not expected to hit the saturation. But how soon it will hit the saturation, it will be very much clear on Monday. So if you are my Patreon community member, okay, then most likely on Monday, okay, looking into the numbers and the movement, I will confirm whether the Dow Jones is going to hit the saturation in the next week or the next to next week, okay, because it matters, because when the Dow Jones hits the saturation, then there will be a technical compulsion to give a bullish movement, okay, and S&P 500 and Nasdaq, they are already bullish. So a bullish movement in the Dow Jones will accelerate the bullish movement in the S&P 500 and the Nasdaq. As of now, Dow Jones is neither saturated nor overbought. Okay. So on the weekly chart, what we have seen is that the Dow Jones, okay, unlike S&P 500, the Dow Jones is simply 70% bearish. Okay, what we have seen in case of the S&P 500, it was 100% bullish, absolute bullish, saturated overbought. Dow Jones is 70% bearish. These two indices are opposing each other. This means that now we can anticipate a correction. Okay, I'm not saying a correction in the bearish side. Okay, it may happen in the bearish side or in the bull side, but a correction is expected to happen in next 1 to 2 weeks. Okay, in all of these indices, and then these indices will try to fill in the gap, okay, or the disconnect that is there, okay, in between these the indices. Either everything will move up, or S&P 500 and the Nasdaq will come down. But whatever will happen, I will keep you posted through these the weekly videos, weekly technical analysis, or if you are my Patreon community member, then through the daily updates which I give every day from Monday through Friday. So guys, I have one more thing to share with you. This is my stock market knowledge transfer program, or S&P 500 knowledge transfer program. Through this program, I teach the movement, strategies, trend analysis, technicals, predictions to predict the movement even before it happens, support and resistance levels, and much more. And the motto of the program is to help you become self-reliant. And this program is delivered one-on-one basis only. Okay, and whatever you are going to learn here, this will be applicable to any stock, any index, any currency pair, commodity, crypto, because we are going to talk about the patterns, okay, the technicals, okay, the movement. And this is my email address. Whenever you want to participate in the program, you can simply drop me an email. And more details are there in the Google spreadsheet. And when you open the Google spreadsheet, then you will see that I've clearly mentioned everything what I'm going to cover, from basics to advanced, the options strategies, the calculations of the options, okay, live calculations, the option calculator, okay, binomial and Black-Scholes. So these are calculations, and then the methods, okay, support and resistance levels, the movement to how to analyze the trend, okay, how to deduce the trend, how to know even before it happens, okay, everything is there. And these are the important terms and conditions, and these are the snapshots of the meetings. So guys, whenever you want to participate in the program, this is my email address. You can simply drop me an email, okay, and if you have any question, then also you can reach out to me, and I've given the link to this program in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here in this, the second point of the agenda, I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart, D as in daily chart. Okay, daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these the daily precise updates of the S&P 500 from Monday through Friday, each and everything, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now on the daily chart, let's first analyze the candle. Now it's a special candle, bullish supportive candle, okay, and it's a bullish cusp, okay. So that is another important thing. What it indicates? This indicates a gap up open, or irrespective of any open, an initial bullish movement on Monday. As simple as that, okay. Now the same candle, okay, let me show you here in case of the Dow Jones. Okay, the same candle is here in case of the Dow Jones. The bullish cusp, okay, there is the bullish candle. Again, the gap up open, or irrespective of any open, an initial bullish movement on Monday, right? And exactly the same I mentioned to my Patreon community members yesterday before the closing of the stock market in the final update, that if there comes a closing, okay, that if there comes a closing in between these the levels in the Dow Jones, in that case, okay, there will be a technical bullish in that case there will be a technical bullish condition, and most likely, okay, a gap up open. And also if the S&P 500 closes in between these levels, in that case another technical bullish condition, and then a gap up open in the stock market on Monday. Now let's analyze the technical indicators. So the technical indicators, okay, clear fan out, okay, bullish, everything is bullish here, okay. And here MACD, okay, once again the same kind of rough movement, breached, and then now it is bullish. MACD is bullish. Stochastic RSI is also bullish. It has also hit the saturation, okay. And through all other technical indicators, bullish, saturated, and overbought, okay, simple. So on the daily chart, S&P 500 is 100% absolute bullish, overbought, and saturated. Overbought and saturation was also there on the weekly chart, or you can say that exactly the same condition, 100% absolute bullish, overbought, and saturated on the weekly chart too. Now let's see whether this bullishness and this thing will be realized in the market or not, okay, through the Dow Jones. In case of the Dow Jones, okay, I've shown you the candle, okay, but remember when I say that there will be a gap up open, okay, or irrespective of any open, an initial bullish movement, this means that even if there comes any open which is above the previous close, any open, okay, 0.1%, 0.5%, or any open, okay, then immediately upon open this condition will be fulfilled. Or even if there comes a gap up, gap down open, but it moves up either initially or intraday and reaches to the previous close, then also this condition will be fulfilled, okay. So but this condition, this is a gap up, okay, this thing does not confirm that there will be a green candle, okay, on that day. No, this is not confirmed, okay. It is just related to just about the gap up or gap down open. In this case, a gap up open, or irrespective of any open, an initial bullish movement, okay. Now on the daily chart, Dow Jones, okay, if you see, okay, here it is clearly bearish. Another thing is the slip. Okay, slip. Okay, and this slip I mentioned to my Patreon community members, I think on Wednesday also. Okay, that there is a slip Wednesday, Thursday, Friday slip, and because of that slip, okay, Dow Jones will come down, will remain under pressure. Okay, now comes the MACD. If you notice, MACD is still bearish, no relief. Okay, stochastic RSI, however, managed to sustain bullish. Okay, this is the only relief, a little relief. Okay, otherwise we look. Otherwise, when we look into the RSI, also again a rough movement. Okay, but still it is bearish. Okay, so all of these conditions clearly indicates that the Dow Jones is also trying to sustain bullish. Okay, and it is giving a fight, but still because of the other conditions or whatever is there, okay, it is unable to do so. And because the MACD is bearish, stochastic RSI is bullish. Okay, so there is no clear confirmation about the bearish side or the bullish side, okay, movement or momentum through these two, because until and unless both of these aligns, okay, in the similar direction, in the same direction, there won't be, okay, any of this kind of confirmation. This means that the Dow Jones is bearish on the daily chart clearly. Okay, but still it is not heavily bearish. It will become heavily bearish if there comes a bearish candle on Monday or on Tuesday, or if there comes green candles but the closing is seen below the Chimoku cloud, and these are the small green candles. Okay, in that case the stochastic RSI will give a bearish crossover, and the day, remember, when the stochastic RSI goes bearish, then the MACD is already bearish. Then stochastic RSI goes bearish. Slip is already there. Moving averages are bearish. A very heavy downward movement will be seen in the Dow Jones. Okay, Dow Jones will be then moving towards its 200-day EMA. This downward movement will force the S&P 500 to come down. This means that on the daily chart, okay, Dow Jones will be considered 80%, 80 or 85% bearish. Okay, 80 to 85% bearish on the daily chart, whereas the S&P 500 is absolute bullish. Okay, so again there is a disconnect. However, whatever is going to happen, whatever will happen, I will keep you posted through these the daily and the precise updates of the S&P 500 as well as the Dow Jones every day from Monday to Friday, so that you are very well aware of what is going to happen, what will happen, what will be the implications. Okay, what are the conditions for the bullish and the bearish movement, right? And guys, it is not just about these the daily and the precise updates which I give to my Patreon community members, but also the stock market opportunities which I give to my Patreon community members every week, minimum 5 to 10 in the premium stocks of the US stock market, top 20 or the 30 companies. And guys, whenever you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will notice that there are these two tiers. This is the daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents. So whenever you subscribe to either of these, then you will be getting the daily S&P 500 and the Dow Jones analysis updates and the probable movement, as well as the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these the daily and the precise updates of the S&P 500 as well as Dow Jones every day from Monday through Friday. And they are very well aware of what is expected to happen, what is going to happen, what are the conditions for the bullish and the bearish movement on that particular day. Okay, whether there will be a heavy movement or a very limited movement. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section, and you can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 and also the Dow Jones for the next week, means from June 17th, which is Monday, to June 21st, that will be Friday. So in terms of the probable movement, a few things that you must understand, okay, about the economic data and these things. But before that guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these the daily and the precise updates of the S&P 500 and the Dow Jones, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now next week, retail sales data will be published and some real estate data will be published. However, the recent pattern in the stock market, okay, it clearly indicates that the movement of the stock market actually has nothing to do with the data which is published or even what the Federal Reserve Chairman is saying. So what this means, okay, all of this simply means that even if there comes an unfavorable data, okay, then what will happen? Then there will be a gap down open, okay, stock market will try to come down, but it will sustain and then it will reverse. Okay, so this will be the impact of the unfavorable data, right? And if there comes a favorable data, then the continuation of the bullish movement. So whether it's a favorable data or unfavorable data, whether the news is good or bad or worst, okay, the stock market may give a gap down open, but eventually, okay, either the same day or in 2, 3, 4 days, okay, it is expected to recover. Okay, so this is what we have seen and this is what we are seeing for last many months, means since October. And in a manner, the Federal Reserve Chairman himself is keeping the stock market bullish. In terms of the probable movement, there is a trend line. Okay, as long as S&P 500 is sustaining above the trend line, it will remain bullish, or it can even try to move up. Okay, or it can even go bullish. Okay, if there comes a gap down open in a manner that this gap down is seen below the trend line, and the S&P 500 comes into open equal to high condition, immediately upon open it comes down, okay, open equal to high condition. Okay, in that case there will be a bearish breakout, it will lose the trend line, the bullishness through the trend line, there will be a fall. Okay, or if there comes a gap down open below the trend line, it tests the trend line and remains below the trend line, there comes a second closing below the trend line, then again a fall. Okay, if there comes a gap down open below the trend line, but it recovers, okay, and it closes above the trend line, it will remain bullish. Okay, or as long as it is giving an open above the trend line, okay, and also giving a closing above the trend line, it will remain bullish no matter what. Okay, now the bullish movement or bearish movement, okay, it is conditional because of the Dow Jones, because there is a big huge disconnect between S&P 500 and the Dow Jones. Okay, because if the S&P 500 would have followed the Dow Jones, then S&P 500 would be trading around somewhere around 5,000 or 5,100. Okay, so there is a big disconnect between the Dow Jones and the S&P 500, but still, because they are the part of the same stock market, okay, and Dow Jones is the prime index. Okay, so again the market will correct itself. Okay, either the Dow Jones will move towards the S&P 500 and the Nasdaq, or the S&P 500 and the Nasdaq will come down towards the Dow Jones. Now, in the Dow Jones, there is a very unusual this a condition, and that condition is actually through the stochastic RSI. Because if there comes bullish movement Monday, Tuesday or so, okay, Monday, Tuesday, Wednesday or so, in that case stochastic RSI will not turn bearish, and as long as stochastic RSI is trading bullish, okay, Dow Jones will remain in a condition to recover or to move into the bullish side, even though it will be bearish, but it will be able to move into the bullish side. Okay, and if this happens, in that case the S&P 500, okay, let's not talk about the Nasdaq, you can simply relate it to the S&P 500. Okay, now S&P 500, in that case it will either sustain bullish or it will try to move up. Okay, but a downward movement it will not be there in the picture, or if there comes any downward movement, then it will be limited. And the actual and the real bullish movement will come only and only if there comes heavy bullish candles, 3, 4, 5 days bullish candles, and there comes a bullish crossover in the moving averages, and also the MACD turns bullish, okay, in that case entire market will go heavily bullish. Okay, now there will be or this will be bad for the stock market, entire stock market, if there comes a red candle of any kind or of any weight, any red candle, a small red candle, heavy red candle on Monday or on Tuesday. Because in that case what will happen, nothing will change in the moving averages will remain bearish, MACD will remain bearish, but the stochastic RSI will also turn bearish. And when the stochastic RSI turns bearish, then it will align itself with the already bearish MACD. If you have subscribed to my YouTube channel for last many months or years, or if you are my Patreon community member, the concept says bearishness will be there in the entire market and in the index. Okay, in that case everything will come under pressure. Now one more thing, the stochastic RSI might not give a bearish crossover, but if the Dow Jones keeps on closing below the Ichimoku cloud, and remember the boundary of the Ichimoku cloud itself acts as the support and resistance levels. If there comes two closings any day, Monday, Tuesday, Wednesday, Thursday, two consecutive closings below the Ichimoku cloud, okay, and the MACD remains bearish, and there comes two consecutive closings below the Ichimoku cloud, everything remains as is. In that case, the market, as Dow Jones will not wait for the stochastic RSI to turn bearish. It will simply go down. It will means it will simply come down, or it will simply give up, and then there will be more bearish movement, and then automatically the stochastic RSI will turn bearish. And considering the current scenario wherein the S&P 500 is absolute bullish, saturated and overbought on the daily and the weekly chart, and Dow Jones is under pressure, looks like that S&P 500 is going to lose some weight. Okay, lose some weight means either it will remain around the same levels, okay, or it will give a limited bullish movement, or it will come down to test the trend line. So in terms of the Dow Jones, 38,750, okay, as long as Dow Jones is trading below this the resistance, okay, and just below the resistance, okay, there is my calculated resistance level. As long as Dow Jones is trading below these are resistance levels, okay, it will remain bearish, and chances will be heavy that it will turn absolute bearish. Okay, now the impact of the Dow Jones will be realized, okay, bullish impact or the bearish impact, okay, on the S&P 500, that if the Dow Jones goes absolute bearish, then we will see some good gap down opens in the Dow Jones. Now as such this will not create a problem, but if there comes a heavy gap down open in the Dow Jones, then this gap down will be seen below the trend line. And remember what I've discussed here, if there comes a gap down which is below the trend line, in that case what will happen, in that case the S&P 500 will be under compulsion to recover at earliest within the first hour, within the first half, or within that day. Because if the S&P 500 fails to recover and test and fails and struggles and remains below the trend line, in that case, okay, this will be the high, all-time high, it will come down, okay, and then as per the bearish movement of the Dow Jones, okay, and if the bearish movement in the Dow Jones continues, in that case we can expect 5191 or 92 in the picture again, okay, which was the low of the candle, okay, here in case of the S&P 500, okay. But as long as it remains bullish, 5400 is there, it is already trading in the 5400 something, in that case 5500, the next heavy psychological level, okay, it will come into the picture, okay. So as of now, the most important part for the most important thing, okay, here in the S&P 500 is the trend line. The trend line is the most important thing, okay, because sustaining above the trend line means bullish, more bullish movement. Losing the trend line, giving a closing below the trend line means more fall, okay. And this will be whether the S&P 500 will be able to sustain above the trend line, or it will give a bearish breakout, okay, So this will depend on the Dow Jones, that what happens in the Dow Jones. If the Dow Jones recovers, S&P 500 will sustain and will move up. If the Dow Jones fails and goes absolute bearish, okay, heavy gap downs or so, in that case S&P 500 will be forced to give a bearish breakout, okay, and then the bearish movement will be there. And there is one more thing, because of the formation of the confluence zone and the S&P 500 okay has spent some good time okay around okay here, okay, this is the zone. This means that even if there comes any fall, then that fall is also be expected to be limited. From the Friday's closing we can expect 2% are very limited, okay, if it happens. And for this fall to happen, it has to lose the trend line, then only a fall, otherwise there will be no fall, okay. So 2% in the bull side, it is already, you know, it is already giving this all-time high, okay, every other day. So as of now, it will move towards the psychological level of 5,500. But whatever will happen on the daily basis, I will keep you posted through the daily updates in the S&P 500 and the Dow Jones to my Patreon community members. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of June 17th, means from June 17th, which is Monday, to June 21st, that will be Friday.